Okay, we have a question from Mark Crockett from online. He says, I see the fibs part of this clearly. How does one get the planetary part?
Well, you get the planetary part by working at it. You know, you'd have to get some books. I'd recommend getting my first book, Astrocycles, The Trader's Viewpoint. I'd recommend Commander Williams's book, Financial Astrology. I've got thousands of books in my library that I've learned, but you don't really need to know a whole lot. I think if you just learned how to use what the P indexes are and the major planetary alignments, you know, the major conjunctions and oppositions, you know, you could pick it up. It just takes some time. It's a, you know, really, no, I don't offer daily astrology advice. I don't do daily astrology advice. I'm a pattern recognition swing trader, and that's where my bucks are. I don't, I talk about the astrology recently because this thing with the Royal Bank of Scotland, you know, really came out. I think I can just, give me a second. You can see everything if I bring it up, right? Let me just show you this. Let me just show you this thing from the Royal Bank of Scotland. Here it is. Where is it here? Okay, this is the study from the Royal Bank of Scotland. It basically said that if you buy on a new moon and sell on a full moon, you would have made, if you just invested from 1928 on, you'd have made 63,000 pounds. But if you bought on a new moon and sold on a full moon, you would get 1.5 million pounds. That's 20 times better. And as you can see, this is a bias because in the bull market, you know, you've got a really good thing. And if you're buying on the new moon, selling on the full moon in a bear market, you're going to be losing. So if you can see that this is going to be a bear market for a certain period of time, you can even actually make that in your better. You know, my feeling is, the person that offers astrology advice, you must teach a person to fish, not give a person a fish. If you give a person a fish, they eat for a day. If you teach a person to fish, they eat for a lifetime. And that's what you want to try to do, is to get them to learn to do that. You can do that just by doing the Gartley pattern. That's all you'd have to do. Forget all the other stuff. Study the Gartley pattern. Do it. Bada bing, bada boom. It's done. And that's all you'd have to do.
Just by looking at this chart, could it be a potential head and shoulder pattern?
And looking at this particular chart here,
Yes.
you're saying it could be a head and shoulders pattern?
Yes.
Yes, it could be, but the problem is it's not very symmetrical. This is a perfect symmetrical head and shoulders pattern right here. There's your right shoulder, your hot head, your left shoulder. That's ideal because this is a 1.618 expansion. This is a 786 retracement. That's a perfect pattern. Here's a 3-drive pattern to the top. Drive 1, drive 2, drive 3. So this is a perfect head and shoulders here. Here it's not very symmetrical. If we got over here, then it would be symmetrical, but this is a perfect one right here. And remember, this is the equity curve. This is not the actual, you know, lunar cycles that he's dealing with.
Okay, we have a question from F. Chung from online. In Fibonacci series, you did not mention a 50% retracement. Is this a valid retracement level as well?
Yes, 50% is a valid retracement in the sequence, but the difference is 50% is a static number. It's not either expanding or contracting. The only time I use a 50% retracement is when I have a perfect AB equals CD ending at a 50% retracement. Let's take this chart that we're looking at right here just as an example. This would be an A, B, C, D coming in at about the 50% retracement of this. Then I would use it. But if I don't have an A, B, C, D pattern there, it's the same thing as using the 382. If I don't have the A, B equals C, D pattern, I don't use it. I use 4 ratios: 61, 786, 1.27, 1.618. Keep it simple.
Okay, in the Baidu example, F. Chung would like to know why does the Baidu chart show an extension at 1.272 longer than the 1.618?
Because there are two different swings that are present there. If you look at it closely, move it over a little bit here so I can get it here. See, the one swing that we're measuring, let's get rid of this. See, the one swing that we're measuring here from point X to point A, if you multiply that times 1.27, it will give you this. This swing from here to here will give you this. Let me redraw them for you and show you the difference. See, there's the 1.27 of that swing right there. You can see the purple line. And then if you draw the swing off of this line right here, that takes you to the 1.618. So you have a 127 here, and you have a 1.618 there. The question about the big boys take advantage of what we think we know in the stock market. Is this a good reason to trade Forex? You know, I don't believe there's anybody that can control the market for more than a day or two. That's even the Fed. But the Forex market is so good is because it's so liquid and it's so big. It's 1,000 times bigger than the stock market at least. And it's all over the world, and it's really fair. And, you know, it's just a great market to trade. You have tremendous swings on a 5-minute, 30-minute, daily. I mean, it's really a big thing.
Larry, not exactly related. How do you control, I find, doing the Forex, it's just very difficult not to be looking at it on a regular basis, at least with the market closed at 4, and we can turn our brain off a little bit. But with the Forex, it seems like Sunday evening right through till Friday we can be doing it, and it's how do you control that?
I didn't understand. Control what? When
Well,
you're watching the monitor?
Yeah, just you know, like say before you go to bed, you think, oh, let's see where the market is, or
go to bed. What do you mean go to bed? This is a 24-hour, 24/7 job. Nobody should go to sleep.
That's exactly why
No,
I quit
actually,
doing.
No, let me give you an example. If you let's say you buy the euro and you're watching a 15-minute chart, okay? Just buy the euro and then go look at something else. Go look at gold or silver or Baidu, something else, and put your limit order in on a beeper so that if it gets stopped out, you'll know. If it hits your first profit objective, you'll hit that. But the problem is if you're watching the monitor, it's a natural occurring thing. Our bodies are prepared to prevent pain. So if you're long, you focus on the upticks. If you're short, you focus on the downticks. And you know as well as I do, oh, look how much I made. Oh my God, look how much I've lost. Now I should have got out. I should have got out here. That's all bullshit. All you got to do is to put your orders in and let it take care of itself, and you don't even have to watch it. No one cares whether you're watching the machine or not. You got to realize that, including me and you and all your relatives. No one cares whether you're watching it. So go do something constructive. Learn how to trade gold or something. The patterns that I trade are AB equals CD patterns, the Gartley patterns, the butterfly patterns, and the 3 drive patterns. All these are in my book, Trade What You See. It's a very popular book in Amazon. It's one of the top technical books. I recommend that book and also the book by Mark Douglas, Trading in the Zone. I also recommend buying all of my other 9 books. I've written 10 books. Buy all of those because I've got a horse in the 8th race at Aqueduct today that it really looks good, and I'd like to take that money and parlay it on this pony. And the name of the horse is Astro Runner, so we should be able to make a lot of money on this horse today.
I got a question for
That's
you
a joke, folks.
on the spot Forex. You prefer spot Forex to currency futures?
No, I trade the CME contracts of the major dollar crosses is what I do. Canadian yen, pound, euro, Aussie, and yen. Those are the ones I do. The reason why, if you trade with the CME, you only pay $4 in, $2 in, $2 out. If you trade with the Forex bank, they're going to charge you anywhere from 2 to 4 pips, which is $20 to $40, and you start every trade with a loss. With the trading at the Merc, which is an exchange, not a Forex bank, you get exchange rates, and it makes it a lot easier. The difference with a Forex bank is they can give you 400 to 1 margin if they want to. The Merc can't do that. But if you're trading anywhere from 1 to 50 contracts, the Merc is a great place to trade because you get good fills and the commissions are a lot. I mean, you're talking about a $4 commission versus a 20 to a $30 commission. If you do 60 trades, in a month, you're saving an awful lot of money. And they trade tick for tick, so they have to. Otherwise, arbitrageurs would come in and make the difference.
Also, do you on your swing trades, do you use a lot of stop losses, right? On your trades.
Please say talk louder, please.
Yeah, do you use stop losses?
Do I use stop losses?
Yes.
I've been in this business 45 years. The answer to that is yes.
Do you have the way you place your stop losses on your swing trades compared to using your Fibonacci's, do you have a specific strategy you use?
I have a set stop loss. The maximum is usually around $500, with the exception of things like crude oil that are a little more volatile. You've got to risk a little bit more than that. But just about everything else you trade is around the $500 maximum. 50 pips in most of the currencies, $5 in gold. These numbers are accurate enough that you should be able to keep it within $500.
Okay, 50 pips, $500. Great. Thanks a lot.
Okay, we have a question from Paul Anglin from online. Suppose there is a bearish Gartley or a bearish butterfly and an indicator is indicating accumulation. Will you still go ahead and go short?
Well, Paul, I'll tell you, I don't believe in indicators. I worked at Commodity Corporation for 3 years, and we had the finest computers in the world, and we looked at every indicator, every oscillator, every possible combination, and the only thing that really worked was a volatility breakout system coming from a period of congestion. I think that's what Goldman Sachs bought the company for, was for that program. But oscillators are lagging. By the time you put let's put an oscillator, I don't even have studies on my thing here, but they're lagging. By the time the market turns, you've already given up some. With pattern recognition, you're trading at point D. You want to be trading right here. See, that's where you want to be trading. That's where A, B equals CD. And there's no reason for it not to. If you just look at it real quickly, just see the symmetry that's there. There's A, B equals CD. It goes up 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Within, with 1 day of the exact point you're looking at. I mean, that's what you're trying to do. Same thing here. Count the number of days up in the move, and that'll be another way of helping, where you think you're going to be. But oscillators, I don't care which one you're using, they're lagging. And you want to be ahead of the market. You don't want to be lagging. I know they look pretty, but they're not very much. And the most worthless thing of all is the 50 and 200-day moving average. That's just a total crock of crap.
Okay, I have a question from Uther. Was May 6, 2010 a P-index day, the flash crash day?
What was the date again, please?
May 6, 2010.
May 4th, 2010?
6th.
Oh, May 6th, that big date? No. There was nothing there that I could see astrological, except there was a time when the moon was, void, of course, which was just a few hours. I don't know what caused that. That's an outlier event that I didn't see. There was nothing astrological to cause that 1,000-point drop. I mean, the top was, top was in, but to have a 1,000-point drop, I did not see that coming at all.
Okay, another question from Uther on AB equals CD patterns. Do you usually try to enter at C and exit at D?
No, well, there's two trades there. You could buy at C, which is a retracement trade at the 618 or 786, or you get ready to sell at D. I primarily look, to be a seller at D, but I also trade the BC swing too, especially if it's perfect symmetry. In other words, the number of bars that go from A to B are 7 bars up, and the number of bars coming down in BC are 7 bars down, and it's coming in at a 618 or 786. That's an ideal situation because you have time and price coming together at a very low risk. So if you buy at the 618, you put your stop below the 786, and that also sets up a nice trade.